This is Optimal Finance Daily, episode 2130. 2 reasons we shy away from investing money and what to do about it. And the government got the recession it wanted. Now what? Both by Mr. Finer of MrFiner.com. And I'm your host and personal finance enthusiast, Diana Merriam. This is the show where I serenade you with the sweet sounds of personal finance knowledge from some of the best blogs on the planet, with the author's permission, of course. And I actually have 2 posts today, so let's get right to them and start optimizing your life. 2 reasons we shy away from investing money and what to do about it, by Mr. Finer of MrFiner.com. This blog has been beating the drum about saving and investing for a while now. However, readers have pointed out several reasons why they don't invest. I also had doubts about investing, and I did not invest for a long time. That was a big mistake because I lost out on all those years of gains. Hence, I wanted to use this blog post to talk about the 2 most common reasons I hear from readers about not investing. Number 1, risk. Investing is too risky. I don't trust the stock market. What if there's another crash, etc. Investing does seem risky. The stock market routinely goes down, and sometimes by a lot. Keeping your money in the bank is much safer. You won't wake up one day to find that your bank balance went down 30%. However, it's also true that no matter how many times the stock market's gone down, it's always bounced back. Always. Sometimes it takes a few months to bounce back. Sometimes it takes a few years. If you have a long time horizon, there's nothing to fear from stock market crashes. If you're in your 30s, 40s, or 50s, it does not matter if the stock market crashes for a few months or a few years. You don't need your investment money for many more decades. And although the stock market may go up or down in the short term, over multiple decades, we can all be sure that the stock market will go up. So if anything, you should want more stock market crashes. These crashes allow you to invest in the stock market at a lower price. Who doesn't love a good sale? Keeping money in the bank is risky, not investing. The best rate at a bank today is 3%, while inflation is around 8%. Things are getting more expensive by 8%, while your money is growing at 3%. That means your money is not growing at all. It's actually losing value at the rate of 5%. And number 2, knowledge. Personal finance is complicated. I haven't learned about investing. I'm not sure where to begin, etc. Personal finance seems complicated. Turn on a business channel and we're all bombarded with complex financial jargon. Most so-called experts on TV sound smart, even though they say nothing useful. The financial industry does not want to make things simpler. If finance folks tell everyone that investing is simple, how will they make money? Who will buy their complex financial products or pay them for their fancy advice? Just like you don't have to be a Michelin star chef to cook your meals, you don't need to be a financial wizard to invest your money. You just need to save a portion of your salary every month to buy VOO. That's it. It does not have to be any more complicated than that. Investing can be daunting if you're new to it. However, there's no better time than now to start investing. Even if you want to start with a small sum of money, the journey of 1,000 miles begins with a single step. The government got the recession it wanted. Now what? By Mr. Finer of MrFiner.com. A few months ago, I had written that the government wanted to cause a recession in order to stop the runaway inflation. Well, now that the government's managed to start a recession, it's worth thinking about what comes next. Why recession? Recessions suck. The economy slows down, job losses increase, and people feel poorer because their portfolio value goes down. It's gloomy all around. So why do we have recessions? Running the economy is a lot like driving a car. You press on the accelerator to increase the speed. When you press the accelerator too hard, the car might crash. So then you press the brake to slow the car down. The same is true for the economy. Most of the time, the economy is growing. New companies are being formed, jobs are getting created, and things are looking good. But sometimes the government presses the accelerator too hard. It prints a lot of money and keeps interest rates too low. This causes the economy to speed up and leads to inflation. In order to avoid a crash or hyperinflation, the government presses the brakes and increases interest rates, thus slowing down the economy or a recession. What comes next? You'll hear a lot of predictions from talking heads about how long the recession will be, and almost all of them will be wrong. No one knows for sure how long this recession will last or how bad it will get. We can look at history to see what's happened in the past. Most recessions last between 1 and 2 years. Although recessions are bad, they're rare. In the last 2 decades, we've only had 2 recessions, the global financial crisis and the COVID recession. The rest of the time, the economy has been in a growth mode. Since recessions are rare, we don't have much experience dealing with them. Hitting the brakes suddenly when the car has been going fast can be jarring. Hence, it's important to prepare now and batten down the hatches for the next year or 2. While there are many things you can do to survive a recession, the most important thing is to save money. It's not too late to start saving. Maybe cooking more at home and eating out less, canceling unneeded or unused subscriptions, delaying non-essential purchases, etc. Just like every other recession, this one will end too. Until then, let us hunker down and hope this is a mild recession. You just listened to the post titled 2 Reasons We Shy Away from Investing and What to Do About It. And the government got the recession it wanted. Now what? Both by Mr. Finer of MrFiner.com. Investing used to completely intimidate me, and now I see it as the easiest part of managing my money. Many people worry about beating the market, but I wanted to point out that you don't have to beat the market to win with investing. You can reach your financial goals by matching the market, which has always risen over longer periods of time despite market corrections. Passive index fund investing is my favorite way to do this because it's been proven to be more effective than active investing. What you really need is to beat inflation and the measly return you'll get by keeping your cash beyond an emergency fund in a savings account. People who actually lose all their money in the stock market are not index fund investors. They're picking individual stocks and even worse, might be borrowing on margin to invest. I also think you can get over your fear of losing money by not looking at every dip in the market. These should be expected. And remember, you're not losing any money unless you sell. Ironically, many people do sell during a market correction because they're afraid of losing money. I think a more helpful way of looking at this is to focus on the long term and look at how much your money has grown versus if you would have kept it in cash. Also, please don't look at Warren Buffett as your example of how it's possible to beat the market. He's a brilliant investor and we can all learn a ton from him. But the large majority of us need a very simple portfolio that mimics the market to meet our individual financial goals. If you're looking to compare yourself to anyone, it should be your peers who are more comfortable at investing than you are. I suspect that many of them are or will be able to retire because they did the simple act of investing early and often, utilizing tax-advantaged retirement vehicles, and choosing investments with low fees and ideally no commissions. And at the risk of sounding like a broken record, please read The Simple Path to Wealth by J.L. Collins if you're intimidated by investing. I cannot overstate how much this book helped me. I'll leave it there for today. Have a great rest of your day, and I'll be back in just a moment with a bonus episode. So stay tuned for that, where your optimal life awaits.